Hi. Oh, we got a visitor. This is my daughter. And my name is Vivian Fernando. I'm taking the time to actually make this video and going through some market analysis. So first of all, before we go any further, I want to make sure you guys understand that I'm not a financial advisor and this is not a buy or sell recommendation for any securities, right? So if you don't like that, please turn off this video and go watch some cat videos. um, she likes cat videos. But if you're fine with that, let's continue. We'll look at what the overall market is doing and how we can kind of see what could possibly happen to the market going forward. Right, so that's the whole idea with this video.
I do like to be that.
Okay, do you want to go play so I can finish this video? Okay, so let's look at this Excel sheet that I created. So what I'm trying to do is I'm looking at the historical data to kind of get an idea of what could potentially happen, right? History doesn't mean that's what's going to happen, but it could give us a clear idea of what could possibly happen, because stock market is all about supply and demand, and if you start to take that supply and demand and start thinking about emotions that traders or individuals play with in the market, you would come up with fear and greed, right? So when there is extreme fear, that's when you see full pullbacks, right? Or recessions, or when you have stock market crash. And when you have extreme greed, that's when the market is keep new highs and people keep buying because expecting it to keep going higher, right? Pretty simple concept. But anyway, so what I've done is I've looked at Dow Jones Industrial Average and S&P 500 ETF and NASDAQ 100, right? Which gives us enough idea of the overall market breadth. So you can see for individual years, I've looked at what is the return, and then I also looked at how many times during this 137 years of the data that I've collected for Dow Jones, how many times the stock has been down more than 10% and more than 20%, more than 30%, 40%, 50%, right? So anyways, the first column should say 10%. Let me correct that right now. So this is what I found. So you can see for the last 137 years, there is only 24 instances in which the stock market was down more than 10%. And it's only 11 times it's been down more than 20%, 6 times more than 30%, 1 time more than 40%. Do you know when that one time that's more than 40 and 50% was? Let's look at that. It was actually in 1931, right after the Great Depression of 1930. Right, this is a Great Depression. In fact, in the middle of the Great Depression, right? 1931, because the Great Depression went all the way to, let's see, 1938. So 1931 is when the Great Depression, the stock market was down over 50%. And literally never in the history it has done that, Dow Jones. And the S&P 500 has never went below 50%. Like you can look at this data. This is 97 years of data, and never more than 50%. One time more than 40%, and that one time is 1931. Voila. And NASDAQ, obviously, NASDAQ is a newer market breadth because it's only 37 years old. It's tech stocks, right? So you can see it has never gone below 50%. One time, below 40%, and that is, let's see, that happened in 2008 when we had that real estate crash, right? So anyways, so is this the end? Like a lot of people are claiming the market, is going to go down over 50%, 60%, and so you have to be careful, or or some people are claiming let's buy the dip, right? So you have to realize every time the market has pulled back, right? There's only few times, in fact, one time in the history that the stock market has pulled back 50%. So if you're waiting to buy the dip for 50% down, after 50% down, the chance of that happening is, you tell me, right? Probably pretty slim, if you ask me. Again, that's my opinion. So, does that mean the stock market has pulled back, especially SPY, for over 8% now? Does that mean it's a good buy now? So, yeah, that's where all the analysis of technical analysis, all of that come into play. But this gives you an idea of what happened in the past, so that you can see what could potentially happen. The possibility of maybe 10% move is probably a lot higher, right? 10 to maybe 15, 20%. But anything more than that could happen. Like you never know. Nobody knows, right? Nobody got the crystal ball that can tell you this is exactly what's going to happen. If somebody tells you that, just run away from that person. But it gives you a good idea of what could possibly happen, right? So, so what I would suggest is look at what's happening, and then maybe I'll make another video where I go through my technical analysis of how I trade a market condition like this, and what do I expect to actually go like all bull, right, or long type trader, or continue to play with my shorts. I'm primarily a short seller, so I actually am enjoying this pullback. But I also go long, so when the market goes up, I enjoy that period as well. So I can maybe make another video that gives you a little more idea into the technical analysis, right? But right now, I want you to understand we're not probably going to pull back like 50, 60, 70% like some of the people are claiming, right? Neither we're going to like just take a V-shape recovery like some other people are claiming, right? Most likely we're going to go sideways and flush another time and have that fear come into the market, and then we ramp back up. That's like the most likely scenario, or the most ideal scenario that I'm looking at, right? If not, maybe go sideways from now and then break out to new highs. That would be another scenario that I would enjoy. But then like taking another 50, 60% dive is probably not going to happen. So yeah, trade well, my friends, and it's not all gloomy out there. So just, it's all about staying in the game. So I hope you stay safe and figure out your edge in trading the market. That's all I have for you. Until next time, you all have a wonderful day.